Yeah, I think fragile is a good, interesting word for it. I think it's interesting to say the least, and I think that investors need to be very careful about what they're looking at right now. I mean, we are definitely talking about fundamentals being really important at this stage of the game,
Hmm.
because just given where we're at, where we're seeing pricing, you mentioned. I mean, it's amazing. The TSX is up 48% or something over the last 12 months. We're sitting record highs, and despite everything that's going on in the world, so I think that investors should be focused on fundamentals because it's easy to see where we can get a pullback here. Now, it doesn't mean that I'm not optimistic, though. I think that the markets can easily carry forward from here and do very well, but I definitely think there's going to be some chop in that, and you want to be a bit careful about what you're owning right now.
You had some stocks on your radar, ones you like the look of. Fairfax Financial, what draws you to that one, Grant?
Yeah. Well, I'm laughing a bit just because I mean Fairfax is like the poster child for boring companies, and but this is exactly what I was talking about is fundamentals being really important right now, and Fairfax is in a really great position because they're benefiting from a lot of the things that are going on. I mean, they're benefiting from the fact that they have a very solid balance sheet. They're benefiting from the fact that as interest rates go up on bonds, that benefits their portfolios. They're priced extremely well right now. Of course, they've got the great track record of great management. Prem Watson is one of the best in the business. And so I think you can look at this and say, hey, this is not something that's going to hit the many headlines in most days. And that's a good thing. I mean, where everybody's chasing a bit of the AI story or whatever it happens to be, you've got a really solid company in Fairfax that I think you're getting a great price on. You can do very well over the next, especially 3 to 5 years. I think they're going to do very, very well in this environment.
If people want to hold an energy stock, you would recommend Canadian Natural as a candidate?
Yeah. I mean, we've held CNQ for a long time. Still love the company. I think they're going to do, I mean, hey, pricing doesn't hurt them in this case. I mean, when oil prices are running a little bit higher or you name it, energy prices are higher, that's going to benefit their bottom line. One of the things I really like about CNQ, not only is the environment good for them right now, but I mean, if you look at just purely yield, and if you're a little bit cautious about entering the market today, you're getting a really good yield on this one just to wait out what market events might come. So, I mean, I think you've got about a 4% dividend yield, but you also got a buyback yield, which carries you almost to 8% or so share buyback. So when you factor all those things in together, and they're and especially if they've got good margins because of good energy prices, I think this looks really good for CNQ. And this is taking away from obviously the longer term energy story that we see. I mean, being in Manitoba, I love the Port of Churchill story, and hopefully we can get that going here. And a company like CNQ can benefit from that as well.
Because you're in Winnipeg.
That's correct. Yeah.
Yeah. Are people in Manitoba excited about possible expansion at the Port of Churchill?
Oh, yeah, it would be huge. I mean, I think we need to start talking about it more. There's a lot of good things going on in Winnipeg, and I know we had some really good people in Ottawa over the last couple of weeks talking about it. But yeah, the people are excited about it. It's very much viewed as we need to get this done because Manitoba might never get another great opportunity like this again. So we got to make it happen.
Another stock you like the look of is Colliers International.
Yeah, this is like another interesting one, and not for the reasons that most people would think about Colliers. I like Colliers because of, frankly, the services that they provide around real estate and the advice component of what they're giving to their client base. This is actually more of a data play than anything else for me. I mean, yeah, the real estate game is obviously cyclical. We've seen that in the past, but what they've done a really good job on is focusing on the services they provide around real estate. And given that they're very data driven, AI is actually supporting them in becoming that much more effective in this. Now, I think it's very early days in that story for them, to be quite honest, but I can see where the opportunity is there for them. And if they lean into that more, I think this is going to be a really great opportunity. Pricing is also really good. We're seeing they're trading below historical averages. And so I think this is a good entry point. It's a good opportunity to get into a good company that's leading the way on this data-driven movement. And so for investors, I think you can do very well, especially, again, looking at the next 3 to 5 years, you probably got a 40 to 75% upside on this company. And I think you could do very well with it. And again, I think there's room to improve on that number depending on how they execute.
Are you paying a lot of attention to these nomination hearings for Kevin Warsh at the US Fed. I guess he'll be under pressure to indicate, I'm not just Trump's hand puppet here, sock puppet. I'm going to chart my own course on interest rates.
Yeah, you know what? I've been very encouraged by his conversation, his language throughout this process. It's clear. I mean, I'm a big believer in an independent bank, Fed, and central banks, and so his language around that I think has been very comforting, actually, especially to the markets. You know, he's done a good job. He's obviously the president's nominee here, so there is alignment to a degree. But I think he's done a really good job of communicating the fact that an independence is still important. And I think that I think he's going to do a good job. I mean, looking around. The other people's comments about him and his track record, I think that he's got a very good opportunity here to lead in a good way, and it's a great succession opportunity. So all things in, I'm optimistic about him. I think he's open-minded to things like rate drops, probably a little bit more so than his predecessor has been. So I think that looks very strong for the markets as well. But again, all of that has been balanced, I think, with independence, which I think is a really good thing.
Thank you very much. I really appreciate it.
Thanks, Andy. Always a pleasure.
Grant White, Portfolio Manager and Investment Advisor at Endeavour Wealth Management.